Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about 3 types of analysis. So why would you want to learn about analysis? Because on this YouTube channel, we do trading and investing. So before you make a decision on why you want to buy a certain company, you have to really understand what is this company all about. So sometime if you're investing, you look at the fundamental of the company. If you are only trading, you only look at the other type of analysis like technical analysis. So let's get into this video today and I will introduce 3 types of analysis that you need to know or you will need to study if you want to be part of trading and investing. So let's start by looking at the fundamental analysis. So fundamental analysis are used by people that are more of the long-term investors. So these people want to keep their money as long as they want in the company. So they really want to know what are these companies that they are investing their money in. So are they good? Do they have good standing asset? How do they manage their liabilities? Do they have good leadership and all those stuff? So fundamental, you look at the method that determine the stock intrinsic value. So it look at more of the financial statement components. So let's go ahead and we will do more later on fundamental analysis. This is just the introduction. So we're just going to define things here and there, but later on we are going to go into detail and maybe give more example on how you really study this income statement and interpret the numbers that you get from there. So this fundamental analysis search for stocks trading price higher or lower than their real value. So these people want to see this intrinsic value of the stock by comparing the price. And this one they will also predict based on the evaluation of the company. Maybe they're looking at their stock, they're looking at the PE, all the ratios that they need to look at before they make their decision, so that when they see it is lower, is it really a right time for them to buy and what are they going to get out of it? If the fair market value exceeds the market price, the stock is deemed to be undervalued and buy is recommended. So fair market value, if it exceed the market price, the stock is deemed undervalued and buy is recommended. So people will buy it. So I think it's more of the buy low, sell high. So people will time and see where they will enter the market. So there are 3 analysis and we are still on fundamental analysis, which we are going to go into detail in another video, separate video. So when you need to understand fundamental analysis, what are some of the things that you look at? So this is focusing on the company financial health. So things like financial statements will be really good for you to check the company financial health. So income statement will give you some information about that. And then like balance sheet will give you some information about that. Cash flow of the company statement, you also can get more information from there. And then now you can see the health of the company in 5 years time or in 10 years time. You can predict, not that there's nothing that is really certain when it comes to financial market and the future, because you never know. It's really controlled by so many forces. So you use that information and then now predict that this is going to happen in the future and let me really invest in so I can be the beneficiary of that in the future. So this one also the market and the economic conditions. So all these things all constitute things that you need to understand when you're doing a fundamental analysis for you to decide which company are you going to invest your money in. So you look at the market, the financial health of the company, and the economic condition at large. The people who are more interested in trading and they trade daily, so the action are mostly like affected by the emotion and other traders' behavior. So fundamental analysis become less important here. They have no time to go and check like, okay, what how many assets do they have, how many liabilities do they have, or so what is going on and all these things. So this technical analysis situation is only based on emotions and people who are in the market during that day. What are some of their fellow investors or traders doing will also determine how the price of the stocks move. So technical analysis, they are based on like price action and then maybe charts and all those patterns. So you will have to check on those instead of looking at the statements, banks, like the company financial statement. So it's a study of historical price trend of the stocks to predict short-term future trends. Okay, so it just happen within a day or within a week. So you only looking at the chart, you're only looking at the trend. So what happened? So like for example, people who catch swing, right? They catch swing, the different between the previous price and the current price and the future price. So before they do that, so they look at the trend, right? You look at the chart and see how far did the price went in the last 2 months and where did it stop and how did it end. So you can see, okay, it was at 50 in the previous week, and then now it's at 55, but historically it had gone to 70. So at this point, you will make your decision based on that information by saying, let me buy it at 55 now and hold it, or maybe in within few hours, this price could go to 70 and then you will make your profit. So that's what they mean by saying they study the historical price trend of the stocks to predict the short-term future trend. Okay, so you can predict based on historical data about how this stock was behaving in the last 2 months or in the last 2 weeks. Quantitative analysis. So this one can apply both on this other two. So this one is only used, it's mostly used also under fundamental analysis because it goes into knowing the figures, ratios, and the formulas that are needed for you to those numbers that you need to know so you can predict where the price is going to go, what will happen in the market and all the stuff. So quantitative analysis give you to show the numbers. And then the qualitative analysis, I think I didn't do the numbers properly. So we are supposed to have like there's two, the fundamental, the technical, and then also qualitative and quantitative analysis under one. So qualitative analysis is based on the standard, the nature, or the quantitative. So it's less tangible. It's only based on the key executive. What is the quality of leadership in that company? You need to know their brand, their patent, their royals, those things that are not really more of the numbers and maybe financial statement things. So it's based on those things. What is the quality, the brand name, the recognition patent? So those things constitute to qualitative analysis. How do people now use this qualitative analysis is that maybe if the company has a key executive that are really good at making a financial decision, And then this will really help you make a decision of buying that company or their brand name. So the brand name sale. So someone could be good at doing retailing, like they buying things, sell them, but Amazon will make more money than that person, even if they are the one charging less price, because Amazon brand is a brand. So if Amazon is a brand, so you see, oh, this company has a future and they are going to grow into big things, or they're going to really make good profit. So let me invest in them. So this is how you use the qualitative analysis. So it's things like brand. So what does it give you? It means this good brand, someone is going to invest in it and they are going to grow. So let me be part of their growth. So good news about the companies and all those things, they always constitute to qualitative analysis. So that's how you use qualitative analysis. And the quantitative analysis is more of ratios, if you know how to calculate those things, and then see how do they really affect the price. And if the company has good ratios, and then that could be where you base your decision on why you want to invest in that company. When it comes to fundamental analysis, is like where you look at the financial statements of the company and you predict the market, predict the economics, predict the earnings of the company and the company growth, and then that one will also help you make a decision of why you want to invest in that company. And as I said before, when it comes to financial market, is you can predict what you want to predict, but sometimes it's also affected by other forces that you have no control over, like things like economic crisis that are going around, maybe pandemic, maybe there are wars, all those stuff. So they can also affect the financial market. So it might also affect your prediction about how the things are going to go. Because let's say, for example, during COVID, nobody expected it. So maybe some of people make some of their decision that didn't really end up being what they predict because of that scenario. So it's something that you cannot predict. And that's the end of the video, and thank you for watching.